Welcome to Money Matters. This is DCrowell from Mortgage Network. And this is Emily Johnson from Polaris Capital. And we are here to do what none of the economists and world experts can do, which is to take all of the world events, reduce them to national events, and reduce them to the impact on Beaufort County.
Okay.
So that's our ambition every week. We always fall short. But that's why
not true. Not true. But it keeps us coming back and trying.
It keeps us coming back
yes.
and trying. We were just talking before the show began about the continued slow but steady rise of the equity markets. It's now become almost absurd. The bull run has lasted for
8 years.
8 years, yeah. I mean, and it's been with only a couple of jogs and a couple of hiccups, but it's been a very, very steady bull run. I think the Dow reached in 2009 first quarter, or second quarter of 2009, I think it reached 6,700 or 7,200 or something like that. We are now at 23,000 and change.
Yeah.
23,000 and change. So
and every day it's a new high today. It's a new high today. They stopped actually making breaking news that it's a new high because every day it's a new high pretty much. But it's the opposite of the thousands of paper cuts. It's the other way. It's little incremental, and it's not every day. Certainly there's triple digit gaining days, but by and large we're seeing 43 points, 93 points, 15 points. I mean it's the opposite of the thousands of paper cuts in positive direction.
Absolutely, and it's the mystery of it all. We've followed the news stories, we've reported them, we've analyzed them over the last 2 or 3 years here at Money Matters. And one of the things that's a consistent theme is a good bit of head scratching as to what's powering the market.
What's powering the market now? Because there's been different drivers throughout this bull
little
market.
mini drivers, right. There's been 8 years of it. So, but this is well beyond any bull market. Bull markets don't last this long. There are usually recessionary forces that come to bear.
We're overdue.
We're overdue.
It gives me and it gives David pause every day whenever we see the market starting. The futures are up again today. We see it ticking up. It gives us pause of, okay, does that mean that new cash that we put to work in the markets, is this going to be the bad time to do it? But at the same time, the momentum is still behind it. We're in another earnings cycle right now, which is, of course, constant, kind of like, whenever Janet Yellen speaks, it feels like it's constant. So, but they're very, very positive. So, technology companies have been, their earnings have been fantastic. Industrials have been overall pretty strong.
Pretty solid.
So that's keeping
banks
everything.
Banks are poised to have quarter after quarter of good earnings because
if rates
start ticking up, then banks do very well. So sector by sector, on the way here this morning, I was looking at the big four tech companies. I was looking at Google, Amazon, Apple. What is it? Google, Amazon, Apple, Twitter. The big ones.
Right. They've been killing it.
They've just been killing it. And
it was actually also Microsoft, Intel. I mean, some of the standard, the stalwart type names too.
And I just felt foolish that I didn't put all my money into Amazon 10 years ago. Because it was perfectly obvious that Amazon or that Bezos was on a winning business plan. Make zero profit, make lots of cash flow, do nothing but build the business, do nothing but take over the world. And that's exactly what he's doing.
But
he has no regard for.
I was going to say, from a principle standpoint, that doesn't make sense. I mean, so you can go two different directions on this. You could say, well, if consensus was that his business model didn't make sense, it usually pays to go against consensus, which you usually buck. So I'm surprised you didn't buck trends. But that's one way to think about it. On the other hand, if it doesn't make sense that there's no profit, it doesn't make sense that the balance sheet looks the way that it does. So you could certainly argue that that was a good decision There's plenty of other companies that don't make money that you can invest in and
that's-
wing in a prayer it.
That's right. But his business model is to not particularly make money.
And
His
yet I have Amazon
business
boxes
model-
at my house.
Yes.
Houses. Actually, there are
every
two
day,
right now.
every day.
Yes.
Yes, every day. And there's also speculation that, in the case of Amazon at least, there is absolutely no impediment, nothing standing in the way of a $1 trillion market cap for Amazon. It's $1,000 billion. Nothing to impede that. The business model is so powerful and so without boundaries that he can basically pick an industry and Amazon it.
Well, certainly there are other companies that are starting to, and pardon me, because of earnings season, there's been a lot more focus on this. There's other companies that are starting to move. Whether or not they're actually able to take much market share away from Amazon is questionable, but the Walmarts, Target's actually doing a decent job moving in there. Certainly Amazon's so big they could practically buy half of those that are starting to take their market share. Nordstrom does a decent job. Macy's does a decent job. Pardon me. But there's certainly companies that are starting to take a little bit, but they're not. They just don't have the mass.
They're modifying the business model. You're absolutely right.
But they don't have the everything.
I've
I've bought steamers and lava rocks on there in the last 2 days. So and shoes.
And that's right. So you can go there for everything. I can buy shoes at Zappos, or I can go to Amazon and access Zappos through Amazon.
So what is this? Yeah.
What is it? I mean, actually, it is Amazon for everything.
Mm-hmm.
Yeah.
But I think the other point that should be made there is that it's been impossible to time. I mean, certainly people try to buy low and sell high, and this is with every day, hitting new highs. The question is, was now the time to go ahead and take gains? Is now a good time to go ahead and put cash to work? Well, there's never a perfect time. It's kind of like the perfect time to be pregnant. It never really comes along. It just happens sometimes that way. And that's how this market's been. It's that's how this market's been. If there's cash to be put to work, you kick yourself if you haven't actually put it to work. And that's one of the questions that we actually, compliance-wise, have to ask our clients is, would you be more upset if you invest money and see it go down, or if you don't invest money and see the market go up? Now, what the answer to that is supposed to gauge, I'm not sure, but we have to ask our clients that question. And it's interesting, pretty much all of them answer the question of, well, I'd be more upset if I saw it go down. But at the same time, I get just as many calls from people saying, why do we have so much money in cash? And if you're looking at 10 to 20% in cash and you're seeing it earning 0.01% and you're watching the market hitting new highs, but if the flip were to happen, I know that the questions I would get would be the opposite.
Which brings us
why do we not have more in cash?
Which brings us close to the end of the first half of the show, with absolutely no progress toward answering the question that we started the show with.
It's my fault.
No, it is not. No, it is not. It's a measure of how difficult this particular call is. We have an unexplained market run that's now of 8.5 years duration, shows no signs of slowing down, and the most common answer is an unsatisfying one. Why is the market, what's powering the market? The unsatisfying answer is, where else are you going to put the money?
Right.
And it's been this odd situation for quite some time.
And
there
since
really
markets are
isn't a
forward-looking,
good place to put the money.
Right. And since markets are forward-looking, usually six months or so forward-looking, that means that what we're seeing baked in to numbers right now is the expectation that we will see continued economic growth, that we will see healthy when it comes to interest rates, that we'll see interest rates that are visible, I think is probably the best way to put that, we're not expecting massive spikes, we're also not expecting big declines, but we're expecting sort of steady eddy. So
this is also, it's quite interesting, this is no political economy. In other words, this is not Obama's economy, this is not Trump's economy. If anything, it's the economy of international business. It's the flowering of capitalism, if you like.
Well, there's certainly some expectation baked in on
because
tax reform and that type of thing. I know.
I knew you'd have to go there.
Well, it
But
is.
the expectations of tax reform, really, the United States is the lowest, it's in the bottom three of industrialized countries for taxes, in the bottom three. And every politician that comes on the television says that we are the most heavily taxed nation. It's nonsense. It's a giveaway to the rich. It's not going to the poor. You won't see anything in your pocket from tax reform.
Fantastic. So on that note, please stick with us. We'll be right back with more Money Matters.